Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 765A, and today's date is September 14th, 2015, and the title of this episode is The Financial Bubble is About to Burst, which will signal the economic collapse. Let's get right into the economic collapse financial news. Now, at this point in the game, everyone, we see the U.S. government central bankers, they're turning up the dial here. They realize we're heading into a collapse situation. And no matter where we look and what we see right now, we see they're continually manipulating every piece of information that has to do with the economy, that has to do with what Russia's doing, what China's doing. I mean, even out in Greece, we see that they're using the meme that Greece, their GDP, is improving. And they're taking on so much debt right now. And they're trying to convince everyone that Greece is once again perfectly fine. They're in a recovery, GDP is improving, and it all looks good. I mean, even though their tourism revenue dropped by 1 billion euros, they have unemployment, which is continually going up. They have businesses that are closing, going out of business, manufacturing down in the dumps. They're trying to convince everyone that GDP is improving there. And we see this throughout Europe right now. They continually tell us that everything is fine. We revised the numbers. Everything is looking good. So you must believe us that everything is okay. And don't worry about it. We got it handled. But what we really see right now is that this whole thing is coming crumbling down. It's not going to stop. It's going to accelerate, actually. And it is spreading like wildfire throughout the private Western Central Bank countries. I mean, Canada's being hit, the Eurozone is being hit, the US is being hit, but a lot of people don't realize this yet because they're kept under that illusion that the economy is still fine. Australia is feeling it, UK is feeling it, Germany's feeling it. It's starting to spread really fast, and these countries are having a harder and harder time convincing the public that everything is okay. But people feel it. They know it. Something's wrong. I mean, even in Canada, their recession, which is heading into a depression, I mean, just a couple months ago, they said everything was absolutely fine. And now we have senior banker describing the book of oil services loans he manages for one Alberta's leading lender. He's saying that there's simply not enough cash flow to support current levels of debt. Bankers and borrowers have kicked the can down the road about as far as they can, and companies cannot borrow their way out of debt. Equity capital is only available at distressed valuations. He says there's just no cash. The foundation of global credit markets is based upon the borrower's capability, obligation, and commitment to pay the money back. The amount of money anybody can or should borrow is dependent on the free cash. Not forecast cash flow, not earnings before interest, taxes, depreciation, amortization. But what we're seeing right now is that the cash flow is non-existent. How much money is available to service debt after all the other bills are paid is not there. This is the key factor behind every credit application, from car loan, home mortgages, to an operating line of credit. The more free cash you generate, the more you can borrow. But we're not seeing this anymore. He's saying the cash flow is disappearing. And it's not just happening in Canada. It's happening everywhere. All these revenues of all these corporations, they're non-existent. This is why we see huge layoffs. This is why corporations are buying back their stock, trying to prop up their business. The whole thing is a house of cards. It's going to be crumbling down. We see the Baltic Dry Index because we know manufacturing's in the dumps. It is down to 805. It is dropping like a rock. This is the holiday season. We should see manufacturing increasing. People ordering goods. Factories needing the raw materials. We're not seeing this right now. I mean, most of these financial institutions, they're not going to make it. And they've already started the layoffs. Deutsche Bank, they're going to be firing about 25% of all workers. 23,000 positions. Well, that's not because they're doing well. That's because they're following what every other corporation is doing. They're laying off, cutting expenses, because the revenues are just not there. We see UniCredit. They're going to fire 10,000. I mean, does this make any sense in a recovery market where they're telling us the European nations, Canada, the United States, we're all in this fantastic recovery? The central bankers created all this free money and everything is fine. Unemployment down here in the U.S. at 5.1%. The Eurozone, unemployment is declining, as they would say. Well, if we use common sense, that means retail would be expanding. Housing sales would be increasing. Companies would be hiring, right? Because unemployment's very low. Why are they laying off all these people? Remember, the U.S. got rid of their layoff department back in 2013 because of budget cuts. Do you really think it was because of budget cuts? Or do you think it was a way of keeping the illusion alive, where they didn't have a department to report on layoffs? There are private firms that we refer to find out who is laying off. And what we're seeing is more and more of these companies continually laying off. Not 500 people, but tens of thousands. Where are they going to find a job? We even have Robert Schiller. He's looking at the economic situation. He's looking at the stocks and he's saying they're overvalued. He says, it looks to me a bit like a bubble again, with essentially a tripling of stock prices since 2009 in just 6 years, and at the same time people losing confidence in the valuation of the market. Yes, this is a bubble. We've talked about this many, many times. This is not a people's economy. The people have nothing to do with the stock market at this point, with the housing market, with the unemployment numbers. This is all driven by the U.S. government / central bankers. They have manipulated, they've created this illusion, and this illusion is falling apart. Like I said in many reports going back a year, 6 months, when we see these economic indicators and the manipulated numbers from the government central bankers start to separate, this is a signal that we're coming towards the end game here. And this is what we're seeing. We are seeing the end game unfold in front of us right now. I mean, we have two banks right now that have created a base case scenario for a global recession. And I like how they say global recession. And they're saying this, it's going to happen in 2016. Well, in 2008, we saw the market crash in October. They continually said everything is fine. And then we saw that recession, that great recession, take hold in 2009. And right now we see Japan's second biggest brokerage house, Daiwa, created and released a report in which they said this global financial meltdown is coming. It's going to be cataclysmic. Then we have Citibank chief economist Willem Buter to issue a report which was just as dire as Daiwa. A global recession starting in 2016. Of course, they already have the patsy. It's going to be China. China is going to bring down the global economy. China is going to be the problem. Not the U.S., not the central bank. It's going to be China. And what we're seeing right now is they're completely setting this up to have a fall guy. And we've said this many, many times. The central bank does not want to be blamed for this. So they're going to be passing the buck to another country. But again, we need to remember, the countries that hold the gold, they're going to turn out to be the winners. And the U.S. government central bankers, they know this. But what do they need to do? They need to get a war started. So they need to set up the players right now. And they keep reminding us who the players are. We see out in London, Peter Hambro is saying that it's virtually impossible to get physical gold right now in London. He said, my baseline, the Chinese, have been buying, and the Indian have been buying in enormous quantities. It's virtually impossible to get physical gold in London to ship to those countries. We get permanent requests from Russia, would please sell our physical gold to India and China because there's no physical, only endless promises. And I really worry that the market, the paper market, could be stamped on and people will say, sorry, we'll have a financial closeout and it's all over. Yeah. We are headed towards the end game. And all these people are coming out of the woodwork saying, yeah, things are going to be getting really, really bad. We even have the Bank of International Settlement, the central bank of central banks, is saying that the central bank shouldn't even be involved in the economies. I mean, this doesn't even make sense in what they say. The central bank is the economy at this point. And if the central bank removes itself, the entire system falls apart. We already know at this point that this whole entire scenario is not going to get better anytime soon. I see in Market Watch, they had a headline, Fed rate increase could be followed by a market crash. Now, we know that if the Fed decides to raise interest rates, let's say they do it, 0.25 basis points or something like that, will it affect the market drastically? No, but it will cause a ripple effect. It will have an effect on the housing market. It will push a lot of people out of the market. They will not be able to buy that house. Sales will decline. Prices will start dropping. And the market will be a complete mess, just like we saw back in 2008. So we will see the starting point of the collapse that's going to occur. But of course, as we know, they're going to blame this on other people. And this is why, at this point in the game, everyone needs to be prepared. Everyone needs to be ready to go. Now, what do I mean by this? I mean, you need that food. You need that water. You need the medical supplies. You need a weapon. You need to have cash on hand. You need some gold and silver. I mean, if you purchase gold and silver, continually do it. If you're purchasing food and water, do not stop. I mean, you don't want to be stuck in that position when everything starts to go downhill. It's almost like being in a hurricane. The hurricane is hitting right now. Winds are at 125, 150 miles an hour. And you decide at this point, this would be a great time to go out to the supermarket to stock up on my water, my food, my milk, and anything else that you can get your hands on. That is not a good time to do it. It's the same with this collapse that's coming. It's not a very good time to wait to the very end. And we're getting closer and closer to it. If you're already doing what you're doing and you've been stocking for quite a while, don't stop. Actually, I would accelerate the process at this time. If you haven't started, I would start right now. You can go to BJ's, Costco, whatever place you want to shop, Amazon. Get whatever you can get at this point. If you want something all prepackaged, you can go to lifereliance.com. They have everything, water filtration, food, bug out bags, seeds, you name it, they have it there. They can supply it right to you. No matter which way you do this, it doesn't really make a difference. You just need to do it. You need to be ready. And if you have the ability to have extra so you can support your friends, your family, I would do that. For those people who've been stacking and packing, I would definitely, at this point, try to bring in extra. That's what I've been trying to do, just so I have enough maybe to support other people, just in case. Now, with Obamacare, we all understand at this point, because we've discussed it many, many times before, Obamacare is not a benefit for the people. It's a benefit for the insurance companies. It's a benefit for the government. It's really a penalty on the people. It's a way for the government to collect taxes from the people. And we're seeing that Obamacare is in quite a bit of trouble right now because they need to double the number of enrollees to make their budget projections work. And they need to get to 21 million next year. And right now they have about 9.9 million. Actually subtract a couple million because a lot of people are starting to leave Obamacare because it is just way too expensive. And we see that a lot of the immigrants who signed up for Obamacare, they're losing their benefits. And this is around 400 or so thousand immigrants because they can't prove their citizenship. Because Obamacare right now, you can only be enrolled if you are a citizen. Now, of course, we have all the illegals coming into the country. They're not citizens. They do get their working paper, which will then lead them to become a citizen later on. And this is the overall plan, is to have them filter into Obamacare, get them into the low-paying jobs by having this work permit. The companies, since they're not eligible for Obamacare, will not have to pay the $3,000 penalty, and the corporations like it. The government likes it because sooner or later they will filter into Obamacare, which will increase the numbers. And you can see they're using this to inflate bubbles because then it allows them to get student loans, it allows them to get auto loans, it allows them to go into the armed forces. So they need this because the only way to increase GDP is to increase the population, bring them in, have them work. And this is what we see happening right now. Now, the White House is going to do something very interesting because they need to inflate the bubbles here in the United States because we have to remember the central bank's product that they sell across the world or force people to take is their debt. That's their product. Without it, they fail. So they need to spread the debt out further and further. Just like Apple needs to take their iPhone and make as many sales as they possibly can and spread the iPhone and all their products out across the world. The same thing's happening with the central bankers. And the only way to do this is to go into a country, remove the government, put a new government in its place, and spread the debt. Here in the United States, how do they do it? Well, auto loans, student loans, any way they possibly can, as long as they continually push the debt out further and further. Now, Obama said he's going to help bolster the access to financial aid for students. And of course, they say this is part of the effort to make college more affordable. Well, this is not going to make it more affordable because when I hear the word affordable, that means the prices of colleges are going to come down and it will be less money to be enrolled in a college. But what they're saying, it will help the student take on more debt to get into these schools. So it's not really more affordable. It's an easier way to get these loans, to put the students into debt. So what he's doing right now is, with his program, under the free application for federal student aid, they're going to make it easier for people to get loans. Just like in the automobile industry. They lowered the requirements so they can bring in the subprime people. Just like in the housing market, they're doing it now with student loans. The only problem with student loans is the student cannot write it off. They can't declare bankruptcy. Of course, Obama's trying to change this, but he's having a very rough time doing this. And the only problem with this is when this bubble pops, the government can't bail it out like they can bail out everything else. So this is a major problem, but it helps the central bank continually issue debt further and further to keep this thing propped up. Now, just because you go to college doesn't mean you're going to get a job. I know many people who just graduated last year. They're still looking for that job. They might have this part-time job, but it's not what they went to school for. I mean, they went to school, they spent $100,000, and they have this part-time job, living with their parents, and they can barely make their payments. This is why they're modifying all the student loans today. And they're modifying it towards your income. So whatever your income is, that's how much you're going to pay. Now, why would they do that if there's so many great paying jobs out there? Because there aren't. That's the whole thing. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.